Hello traders, this is Rich from Tradesight. This is the market preview for the coming session. This is for Thursday, February 6th, 2014. We had a day today where we tried to get something going to the upside, but just couldn't really deal with the 1750 level in the ES. So what we did was wound up closing about unchanged, pretty much across the board. The one negative certainly is that the internals were bearish all session. The advanced declines were negative on both sides, and we didn't really get any help from the VIX either. But without further ado, let's move on. Let's circle back and take a look at the active patterns right now before we go into the levels. Here's a look at the ES futures. We're still using the this triangle wedge as key support. We're just kind of just hammering around the 1750 level without being able to reclaim it back to the upside. We did break out of the previous day's range, but we're still contained within the large body candle to the downside, which is the other real technical feature today, besides using the lower boundary of this wedge. This is a look at the Nasdaq side of the market. The Nasdaq side is still gaining and still using that triangle wedge as support. We did penetrate the low from Monday, but we're able to hang on to that for now and close back up in that range. So potentially a small positive, but certainly nothing to hang your hat on. The low of the move is definitely going to be important going forward. All right, so here's a look at the ES futures. ES futures tried to take a shot a couple times intraday at that key 1750 level. Really didn't do too much. You can see the two tiny narrow bodies here, one after another. So we've got some very indecisive action so far. We did make a lower high and a lower low relative to the previous session, but the real body in the open and close action is all pretty much contained. So really nothing new technically until we break out of this range, either to the downside or the upside. To the downside, 1732 and a quarter is going to be the key area, which was the low from the range expansion. 1750 to the top side. Then above that, the static trend line is going to come into play at 1760. If we do release a little bit lower, make sure you're aware of where the 200 DMA is coming in, about 1705 or so. The NQ futures use the static trend line for support today. If we lose that on a closing basis, that's going to open the door to essentially the 2-ace level of 32.81 and a quarter. So be prepared for that if we do start to break. We're not going to have a whole lot of support, I don't think, at the 3-ace level. To the upside, the 10 EMA is going to come into play at 34.91, and then more important resistance is going to be found at the 5-ace level, because that's coincident with the 50 at 35.15. Keep in mind that the MACD is still in a bearish condition where we've crossed lower and are now below the zero line, but are certainly not picking up downside momentum just yet. But that definitely could expand to the downside if we get another leg of selling here, especially off of the NFP number coming out on Friday. The market internals were definitely negative. The advanced declines on the New York side were minus 500 issues. Didn't really move the needle too much. Let me just rescale this for you. So we haven't really made a new low relative to the previous swing low. But on the Nasdaq side, we were minus 1,000 issues. So you can see that we've lost the support of this trend that has been in place for a year. So this is definitely a negative development, and we're starting to actually accelerate to the downside, even when the market's trying to hold up. So this is definitely a negative development for the market, and certainly compromises the overall underpinnings of the Nasdaq side, especially. Made a little more positive movement here in the S&P TLT cross. TLT was fairly weak again today. So even though the S&P was fairly flat, we did make some improvement in this key ratio. So if we continue to see this rise to the upside, that's going to be further evidence that they're putting on risk and shunning the safety of bonds. Now let's take a look at the ES. That's the red line versus the gold futures. The gold futures are in yellow. You can see that we still have this extreme spread between them. So there's plenty of room for convergence here. if we want to start to see some safety trades being put on. So definitely don't take don't take gold off your radar just yet. This definitely could be a worthwhile trade, and we'll drill down and take a look at the gold chart in just a little bit. Here's a look at the TLT. The TLT crossed and settled below the 10 EMA, which puts the chart short-term negative after this very strong move up to the 8 ace level. Next level to watch for the downside if we follow through below the 10 EMA is going to be the 4 ace level at 106.25. So definitely keep this in mind tomorrow. If we see more weakness in the TLT tomorrow, I think we could definitely see a little better bidding interest in the overall broad market. Let's take a look at gold futures. Gold futures are still not really the place to be just yet, as far as having any kind of universal appeal. There are some people still kind of fishing. We're at the 4 ace level, just holding above that key 1250 level. But we've had some attempts higher, but they've been rejected. Here's a look at the individual sector performance today, ranked from best to worst. Top gun on the day was the consumer staples, the real defensive issues. The telecom index was also pretty positive. The drug index was positive. We did have some results from some of the manufacturers in that industry, and they were positive. And the stocks was also positive, trying to reassert itself a little bit. Problems were that the transportation average was fairly weak, and the oil services was also very weak. Actually underperformed the XAU. All right, here's a look at the drug index, which was one of the top performers on the day. It is a defensive-minded sector. Still hasn't been able to reclaim that 8 ace level. If we do pivot above that 8 ace level, it's also going to put it above the 10 EMA and make the chart short-term positive. Real negative here is though that we're threatening to cross below the 0 line, where we could see some downside momentum develop. The semiconductor index, the SOX, was higher on the day, which is notable, especially after having a pretty weak intraday bar where we undercut the previous support levels by a decent amount. Keep in mind that if we do pivot back to the upside, we're going to have some pretty good resistance where the 50 and the 10-period moving averages converge. Here's a look at the Dow Transports. We did undercut the recent lows. We're still trying to hang on to this to the static trend line, but it's definitely not a very positive scenario. Technically, you see the dash line here with the static trend line, which means that we did close below it and follow through below it, at least by one or more ticks. So that's broken that level. But that general area is still going to be in play. If we do pivot back to the upside, we're going to have some resistance at the 10 EMA. And to the downside, the near-term target remains 68.75 at the 4 ace level. BTK index was also fairly weak today. We're still short-term negative. We're starting to get a little distance below that key 8 ace level and retreating from the overbought area that we reached almost plus 2 ace on the Murray math box. MACD is in a negative condition, but is still decently above the 0 line. So we've got some room before we really hit any kind of real downside momentum. Next target to the downside is going to be the 50 DMA at 23.80, and then more important support at the static trend line is going to be found at 23.28. All right, last up is the last laggard on the day, which is the oil services, the OSX. The OSX did interact with the minus 2 ace level at 257.81. This is a real key area. If we lose this level, that's going to be very bearish, because we're going to wind up with a frame shift. And you can see we've got a fresh downside setup phase here. So all we're going to wind up doing, if we complete this, is potentially going into a full downward exhaustion run. The MACD remains negative and is still decently below the 0 line, but perhaps in a kind of condition where it's been below it long enough now where we can start to see a little bit of a curl up. If we do curl back to the upside, the 0 ace level at 265 is going to be the next thing in play. The other takeaway here is that we really need to see some better action out of the oil services and the transports, because they're the late cycle sectors, and if we're not seeing that, that really implies that there is some weakness underneath the market that the market just will not ignore. All right, folks, just keep in mind that tomorrow is going to be the day before the non-farm number. So tomorrow's going to be the setup before that NFP number. The NFP number the previous month was very, very weak and caught a lot of people by surprise. So be prepared for maybe an increase of volatility tomorrow, as there's some aggressive posturing ahead of the non-farm number on Friday. All right, folks, as always, thanks for listening. This has been Rich for Tradesight.